So let's just talk a bit about the kinds of companies that invest in other companies, holding companies. If you've got, you know, for a Brait, for example,
that's private equity.
Yeah, you invest in people who invest in other people and so on. What's your sense of those companies where they do the work for you, but you could invest in those shares yourself?
You know, a company like Brait did very well, and you need economy of scale. Obviously, being a stockbroker, I don't really like companies being taken off the exchange, like Edgar's, Edcon, that was privatized and taken over by private equity, because it reduces the options on the exchange. But I think private equity companies have got a place. Obviously, they went through a very bad time because they overpaid in 2008 and early 2009. They overpaid, and Edgar's, I think, is a big point there. I mean, from profits to a loss. So it's not always rosy. But if you've got good management in a private equity company, you've normally got a time horizon of 5 years or 10 years on certain projects. I think they do provide very good returns where you cannot actually access that on the stock exchange because of them not being listed. And obviously, some of those companies will come back and get listed. So it's not a one-way street, just out of the JSE. We will see some of it coming back. I think there was talk about bringing Edgar's back for a listing. Difficult time, and I think there's a bit of egg on their face because they're probably going to list it at a lot less than what they paid for it. But yeah, I think it's a dynamic market. And there's a big incubation there of companies that then gets grown. They take some management, they put in some management expertise in there, and I think generally there's a huge role for private equity companies.
Talking about the infrastructure, and it was interesting there that they'd been burnt by it, but it wasn't what I thought. Where he said it's the advisory work, and as you said, that there's it's not a capacity problem then with bulldozers and.
Yeah, they sold the investments that didn't do well, and yeah, well, they did it not too far from the bottom, but at least they got out because they had to get their balance sheet right. I mean, that was a big problem, and with their financing costs reducing, I think they're in a much better shape and in a better focused, diversified company.